May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the pound USD, the pound USD. But first, let me apologize for not putting this out yesterday. I did try. I put out two videos yesterday. And I usually put out between 5 and 7, but ran into internet and trading view issues. I was made I would make the video come close to completing the recording, and then it would just go poof, into cyberspace, and you know, it would interrupt the recording, and um, the data was gone. I just did not couldn't explain it. I kept trying, and after a while, I just gave up. Hopefully, we have a better day today. Again, my apologies for that. Shouldn't happen again. But let's take a look at the pound. Now, I want you to first see that we got news. We got news. All right. We have the U.S. President Donald Trump threatening tariffs to 8 NATO countries in regards to Greenland, and how they're going to how he wants to buy it or take it, with military action if necessary. And it's just had look at this, the opening candle for the week. All right, it gapped down and then opened up. This is on the daily time frame. So it's had a high impact, something that causes me to have to adjust my forecast. In either case, something to bear in mind with news. When there's news, especially if it's a Donald Trump or a tweet or something that the market is reaction off of, most of the time it's not a reversal threat. It's usually just a surge, a spike, if you will, and it's temporary. So we'll see. Sometimes it's not, but more oftentimes than not, this kind of news usually has a temporary impact. And it's a holiday in the U.S., so it's a bank holiday. So you should be extra careful to trade on days where there are no red folder news items. All right, Tuesday, Wednesday, Thursday, and Friday. Those are going to be the times to trade, um, especially forex pairs that are against the U.S. dollar. Those would be the better times to trade. Now, let's go to the pound USD. We're looking at the monthly. What you can see here, this is the new monthly candle here. This is January. Right now it's doji looking, all right, indecisive. All right, but what you want to notice is last month was a very strong close above the previous monthly candle, which was November, right? December's candle closed very high, and you would think that it indicates that we will, on the next formation of the new candle, we will trade towards this high. All right, and that's exactly what happens. We did trade towards that high. We opened, came up, traded, and it flipped bearish. Why did it flip bearish? This candle right here. Looking at the large wick here, you don't want to see, if you want to see the market continue bearishly, you don't want it to you don't want to see a close above the 50% of the range of this wick. And that's what happened here. On a lower time frame, there's a fair value gap there, that the market found. And you can see, let's see, uh, this is the an area of supply on the this is the weekly. The price did not exceed that the extreme of this order block up here. This is this area, the supply zone here. You can see it just tapped it right there on the week of January 5th. Okay, and it respected it. Uh, I'm uh, really trying to see if the market has any inclination to go up any higher. I do not think so. All right. We had a bullish fair value gap here that's forming, but it's not there yet. So we can't even count that. All right. But this supply happened. All right. We have two candles that went down, closing past the the low of this candle, the low of this candle here, the close of this candle here, and uh, then you see the market push up higher towards that, what I consider a protected high. It respected it, and you can see how it respected that area here. And now I want you to see last week, this is how the candle closed, bearish, under the very low of the weekly candle prior to it. All right. And that would indicate we will trade, we should open and trade towards the low and continue, have some bearish continuation. So far, the market gapped open, and I want you to see it clearly that we gapped open down. It opened up here, it closed here, and then it opened here. That's a bearish, it's a bearish indication, right? But then the market closed that gap, that volume imbalance immediately, and it's heading towards again the 50% of that big wick. Now, if past price action says anything about future price action, you can at least see some kind of precedent. Doesn't mean it's going to happen the exact same way, but you can see that there was a candle before the candle before last week's 2 weeks ago had the same kind of formation, right? There was a large wick. It closed bearish just under the previous candle, the previous weekly candle. It did not, you don't see a close above that high. The market reached up and then turned bearish, all right, just before that 50% mark of this wick. I'm looking to see the same thing happening this week. We have the knee-jerk reaction by the market on Trump's tariffs and Greenland and all of that. Okay, uh, we we have yet to see if the market will slow up and turn back around just yet. If we go to the daily, you see that candle is pretty broad. All right, we had this inside bar here. All right, yeah, there's a big wick on it. All right, but it's an inside bar, and when you see inside bar, this is where you start to where it can happen that the market changes direction or continues. But sometimes you'll see it change direction. But I'm not looking at this candle like that. Why? Because of the gap opening. All right, the gap opening and the move up higher. What I'm looking at is remembering that uh, uh, this there is an order block here. All right, a bearish block here that the market could find support resistance here and come down. All right, and I'm looking for that. That's what I'm looking for. All right, you can see there was a bullish push here. All right, closed up pretty bullish going into the bearish fair value gap here. All right, the very next candle takes out that high. All right, we expected to take out that high and then flip bearish and then formed a bearish order block here, and we closed below that low. All right, this is a very nice size bearish order block, and that's what this market, well, that's what the this candle is pushing up into. I'm thinking that we're going to turn around and head towards these these lower sell side targets. Could this be the start for a rally higher? It most certainly could. All right. But I have some structural points here in place that make me think that the market will find resistance and then turn around. All right. Now, what I want you to see, this is the 4 hour time frame down here, and you can see that. Let me get. You can see that we had the formation of the order block here, a series of up closed candles. Then we finally close below it. We come back into it, and we dive down. We push back up. We could take out this high. We could take out this high. Why does that line always do that? We can take out this high here and then start turning around like I'm expecting right it. That's the formation of this lower order block. This is the larger order block, but there's a smaller one inside, nested inside. And I'm thinking that's going to be enough to for the markets to turn around. So that we'll see when it happens. All right. I don't see bullish order blocks forming inside of this 4 hour bearish fair value gap. I do not. All right. But I do see that we did take a high. We swept some liquidity here. Let me mark that. And this is, and you see that we're making lower lows, lower highs, lower lows, lower highs. With that news, we can see, it's conceivable that the market wants to sweep buy side liquidity for those that are in shorts. But for those that are joined in the downtrend here, the market came and got them, and I could see, it's reasonable to expect that the market may just be sweeping them out, taking them out of their trades, and we could see the markets head down towards the sell side liquidity targets down here. We shall see. We shall see. If we take out that high, if we take out these highs, we have a sweep here. All right. And this is a 2 candle pull up. And then we finally close below those lows. This is a legitimate, like I'm pointing out here, this is a legitimate bearish order block. And I'm looking for it to hold price at bay. Does that make sense? Let me know in the comment section if you agree with my assessment. We'll see. All right. I will put out some more videos today so that I can make up for yesterday. And the next one should be gold. And I'll see you in the very next video. Check me out there. Make sure you hit the like button, man, and help the channel to grow. Make sure you hit the boost button, and do leave me a comment, and check in with me during the week. For all of you who follow my trades and my trade ideas, make sure you're checking in so you can give me some feedback, some real-time feedback on my analysis. And if you have some thoughts you want to share with me, I would definitely welcome every last one of them. And throw in a chart if you like. All right. I'll see you in the next video. May profits be upon you.